All right, welcome everyone to today's webinar on impact investing. We have an exciting webinar scheduled for today. We are doing it live. We'll open it up for some Q&A throughout, and at the end, we have a couple of announcements that we want to make as we kick things off for the new year, some upcoming events that we have. We'll go over a little bit of high level of what we have going on here at Directed IRA and Directed Trust Company, a little bit about the self-directed IRA space, and then we're going to roll right into today's guest speaker. I'm Aaron Halderman, CEO of Directed IRA, and with me I have Nate Hare, our VP of the
Sales and Strategic Relationships.
Whew, there he is. There he is, everyone. Take it away. What do you got in store for us, Nate?
So before we get into our webinar with our special guest, Larry from DLP Capital, we want to make some quick announcements. For those of you who are clients, you might already know this. It's that time of year again. Our Self-Directed IRA Summit is upon us. It's our 12th Self-Directed IRA Summit now. This is actually an event sponsored by Directed IRA. If you know Matt Sorensen, Matt Sorensen is our CEO, best-selling author of the book, The Self-Directed IRA Handbook, which has sold, I don't know, over 50,000 copies at this point.
I mean, if it's me, cowboy math, I'll say like 100,000 plus, but yeah,
okay.
it's like 100,000. It's like 50,000
right.
plus.
So, and this is the reason we sponsor this event, and it's always going to be sponsored by Directed IRA, is we find that there's a huge need in the market for people that have retirement accounts that are just not confident in the stock market. Maybe they just want to diversify into some investments that they know and understand better. And we talk about the ability to do that through what's called a self-directed IRA, and the ability of self-directed IRA allows you to invest in alternative assets. Things like rental properties, multifamily, commercial property, syndications, promissory notes, cryptocurrency, private businesses. I mean, the list goes on and on. There's not really much you cannot own in your retirement plan. And I will tell you, the rich and the wealthy have been using alternative investments in their portfolio in self-directed IRAs for many, many years. And this is our opportunity to bring this information to the public. And this year we're hosting it in beautiful Austin, Texas.
Oh, yeah.
Which is a great
we got
market.
A slide for it, don't we?
We do. And it's up right now. And early bird tickets are on sale now. So if you jump to sdirasummit.com, we're giving a $50 discount on tickets. I will tell you, if you understand self-directed IRAs and you think you've mastered it, you still want to be at this event, because these events provide a great networking opportunity for you to rub elbows and meet other self-directed IRA investors. We've got over 20,000 clients now at Directed IRA, over $2 billion in assets under management. And
under custody.
Under custody. And our clients still look for opportunities to get out there and meet new people, because one of the things with a self-directed IRA that people have to understand is you got to go out there and find your own investments. We don't sell investments to our clients. It's another reason why we put these webinars on, is to bring, a little light onto different, investment strategies and opportunities that are out there, but we're never going to promote any investments. And this is just a good opportunity for you to learn more about self-directed IRAs, pick up some new nuggets. Maybe there's some new tax law changes you might be aware of, but also meet some other investors. So it's going to be April 26th, 2025. We will be doing some networking the night before.
Yes.
We'll do a welcome reception.
So get on the 25th. We do have a welcome and networking reception starting, I think, around 5 or 6, somewhere around there. Yeah. We'll do that for a couple hours. If you can't make it live, totally get it. Grab you a virtual ticket. We will be live streaming, and you'll get the recordings as well. However, there's nothing that beats being able to attend and be there in person, live, network, meet other people. Yeah. So if you can get there in person.
And if you're in Texas, you have no excuse. You need to get out there, get in your car, whatever it takes, get out there, because I will say, and I don't know if I can release this, but we're going to be sponsored by some great Texas groups, like the Texas RIAs are going to be one of our main sponsors. So they're the largest RIA organization in the country, very active group, and they've agreed to be a sponsor as well of the Self-Directed IRA Summit. So it's going to be a fun time. A lot of experienced investors.
Come on out. Come hang with us.
It's going to be great. So jump and get your tickets, and we'll remind you at the end. And let's just jump into it. We've got a couple slides we want to share for anybody that's new. And I think we already had people identify themselves if they're brand new to the program. But let's just set some foundation. When we're talking about retirement accounts, it's important to understand, ever since IRAs were created back in the mid-70s, you've been able to invest in pretty much the same things. Okay. Most people just think that you can invest in stocks, bonds, mutual funds, ETFs, REITs, and CDs. Those are just the investments your Fidelity offers. Those are just the investments your Charles Schwab and Wells Fargo advisor offers because they're licensed securities brokers. They sell investment products. That's not the only thing you're allowed to hold in a retirement plan. In fact, by law, you can hold almost anything in a retirement plan except life insurance contracts and collectibles. That's pretty much it. But when you want to invest in things outside of the traditional investments and you want to invest in things that are considered alternative investments, like you see on the right there, you have to have an IRA or a plan with a custodian like us, Directed IRA. The difference between Fidelity and Directed IRA is we don't sell investments, but we're still licensed to hold and administrate or custody the assets you hold in your retirement plan. But our account agreement with you as the client says we'll hold anything the IRS allows, but you have to find the investment. You have to tell us what the investment is. We'll tell you the documents we need to buy that in your IRA, but it really opens up the spectrum of what you're able to invest in.
Absolutely.
So if you want to invest in other things, again, set up a call. We've got some information there, but just be aware that you can invest in almost anything with a retirement plan or some sort of tax advantage plan. And these are the 6 plans that you can self-direct. These are the 6 plans that we have at Directed IRA. And you'll notice not all of them are retirement plans. So you'll see there on the right-hand side, yes, you can self-direct health savings accounts. You can self-direct Coverdell education savings accounts. And when you step back and look at the types of accounts that we have, we've got 6 there. Be aware, all 6 of those plans, by definition, are tax-exempt trusts. These plans pay no taxes on gains. So if you want to grow a bucket of wealth and you want to prepare yourself for retirement and add some assets in your retirement portfolio that appreciate in cash flow, like real estate, think about the types of plans that you have or the types of plans that you might set up, whether that's a personal plan you want to self-direct with us, be it a traditional rollover IRA, a Roth IRA. If you're self-employed, you can also set up and self-direct a SEP IRA. I would probably throw out a guess that we probably set up more solo 401ks than almost anybody. That's great for any of you self-employed individuals that have some Schedule C or 1099 income and you have no employees. What a great investment vehicle to throw some alternative investments in. So that's another investment, or that's another account that we have here at Directed IRA. And if you're really looking to maximize your tax savings, you probably want to have a plan in each category, especially if you're self-employed. So this is the way that we help people save for retirement, is the ability to put alternatives in these types of plans. Anything you want to add to that?
Well, what I'll say too, and that's a great intro, Nate, is that that's why you come and attend sessions like this. And we have a ton of webinars, podcasts. Matt puts out a ton of content on social media and on his YouTube channel. We do this to educate each of you on what self-directing is and all the options that you have available for you, both from an account plan or a strategy that you're looking to implement, and then giving you some ideas of what kind of, investments are out there in the alternative space other than a stock, bond, and mutual fund. And, I'd say probably the hardest part on your end is like, you just have to do your own due diligence.
Yeah.
Is really what it comes down to. But, over half of our clients are investing in some way, shape, or form of a real estate based asset. And that could be, from commercial, residential, and then all the various aspects of that, from, a single family to lending to going into a syndication. So just as Nate was explaining, all those different types. And so sometimes that's why we see a lot of these private placements and syndications being so popular, is people are kind of like investing and learning as they're investing, kind of going along with it before they do their own deal. But a lot of our clients also just do a rental property.
Yeah.
And it's the same type of paperwork involved, except it's your IRA that's taking ownership and on, the deed of trust, then, you personally or a business owning it, or you're, a trust or the state. So
yeah. So besides just the tax savings, I mean, self-directed IRAs allow you to invest in what you decide you want to invest in, and whether that's you feel knowledgeable. And I would say the real estate thing is something most people understand. Most people know what to do with a 3-bedroom, 2-bath house if they had it,
And we'll be going over, some of some different strategies and a little bit of a track record and the various opportunities on the impact. We'll go over what impact investing is and why we have a special guest to cover that, and the success that they've seen and how you can, learn what they're doing as well.
And to lead in the last slide that we'll share, for this session is, there's over $40 trillion in U.S. retirement plans. It's the largest source of Americans' wealth. More people have money in their retirement plan than their bank account. But if you think to yourself, and maybe you're not the gal or you're not the guy, but I would probably argue that most people don't even know what they own in their retirement plan.
Yeah.
They might know it's a mutual fund, but they don't know the companies in the mutual fund. And we're just trying to switch that gear and realize that this is your most powerful bucket of money. It's where you have most of your money. It's where you get the best tax savings. And if people really focused on what was really in it, I think people would grow it better on their terms. That's not to say alternative investments aren't risky, but in my mind, if you invest in the things you're knowledgeable about and understand better, you're going to limit your risk over the long haul and make yourself better returns over the life of your retirement plan. So at that point, what we want to do is we want to bring on Larry. Larry, are you with us?
I am. Hi, everybody.
Welcome, Larry. We're really excited to hear what you have to present, and I will give a little background. We are both part of an investment group. I won't name the names, but we were both out in Dallas, Texas, and I didn't hear you specifically. You weren't there, but one of your team members was there, and I was blown away by how knowledgeable the DLP team was about just the state of the economy with affordable housing, and the things with your impact investing strategy. And it really hit home to me because, one of the things that I love about self-direction is I like the ability to pick my own investments or who I invest with. I always invest passively, which is something most investors do, is they invest passively. They put it in the hands of other syndicators or investment operators. But the thing that most people don't talk about is the social impact of those investments have, whether you're investing in affordable housing or providing the American dream of homeownership for somebody. And I feel like you get a direct correlation when your investment in your IRA is a direct investment to, say, a private fund, a private real estate fund, instead of just investing in some nameless, faceless REIT that you can find on Wall Street. And nothing against those, but you have a little bit more transparency, I think, sometimes with the investments in a private investment. And you've got some great slides that you want to share with us. And again, this is for information purposes only, guys. This is for education purposes. We're not selling you any investments, but it's good to just understand what some of these operators are doing. And you guys have got a great track record. I'll just throw out some numbers. Over 40,000 doors, 3,000 investors. And here's the one that blew me away. Over 5 billion in assets under management currently. I mean, that's a huge amount. And you guys have been in the industry for over a decade. So that shows that, you guys have a good track record. And welcome to the Inc. 5000 family. We were named to the Inc. 5000 list as well. So I saw you guys, you can hang your hat on that as well.
What number are you guys, Larry?
I can't tell you exactly what number we're on, but we're very happy that we've been on it for 13 years running. So as you guys know, that's on a 3-year running tally.
Yep.
So certainly our whole goal is to grow consistently over time. And, certainly as are you guys, doing a wonderful job of continuing to serve in a way that's scalable, in a way that's growing consistently year over year. So congratulations on that.
Awesome.
Amazing.
Well, take it away, Larry.
Awesome. Well, thank you all so much for taking the time. I'm talking to you here today from usually sunny Florida, St. Augustine, Florida, for those of you who are close by. I will still say it is beautiful no matter where the temperature might be today. But I'm happy to be with you today. And Nate and Aaron, thank you guys for letting me share some time with you all today. So this is our disclaimer in case you can see here that we don't give tax, legal, investment advice. And we're here to educate and, as Nate mentioned, talk a little bit more about why we're so passionate about making an impact, specifically in real estate, which is what we're focused on. A little bit about my background. I came from the traditional private wealth management, credit, insurance world, mainly at large financial institutions. And I sat across the table in the 2008s, for instance, seeing folks that were losing essentially half their portfolios, what seemed like overnight, being in investments that they had no visibility into, that they had certainly no control into. but also as far as how it's fitting in with their overall legacy. So I'll tell you a little bit more about how DLP attacks that, and I'm just super grateful to be with Don and DLP now for going on almost 10 years. This is Don Wenner, our CEO and founder. Nate, as you mentioned, we started DLP in 2006. Started as a traditional real estate brokerage, and through many iterations of finding gaps and seeing issues that we felt that we could solve and serve people, we got into real estate investing and then into lending. So over these now almost 20 years, we've funded over $6 billion of loans to other real estate operators. We've invested over $11 billion in the building of thriving communities, and I'm going to explain a little bit more about what we mean by that in a couple of minutes. Don has written 2 awesome books, which for anyone that you'd like, we'll make sure to get in touch. Very happy to send those to you, Building an Elite Organization and Building an Elite Career. And he's working on the 3rd, so please stay tuned on that. I'd be remiss if I didn't talk about Don's success as flag football coach with Donnie and Alex there and little Jakey. Whether you think it's fortunate or not, he's a lifelong Raiders fan and a de facto Jacksonville Jaguars fan, being here in Northeast Florida.
When the Super Bowl
let me tell
you there?
Yeah,
It is, right? I think
It's
so.
in Las Vegas.
Yeah,
I think it was last year.
Was it?
Yeah.
Oh,
absolutely. So regardless of who you follow, I think we can all get on the ball here in terms of, what does it mean in order to serve and make a bigger impact? So that's what I'm here to talk to you about today. And who are we at DLP Capital? We're a private real estate investment firm. And as I mentioned, we're focused on transforming lives through the building of thriving communities. So we're a vertically integrated group, which means that everything that we do in order to drive investor returns is done in a DLP team. So you can see our phenomenal leadership team across all of our verticals. And this is essentially how we work. I oversee our funds group, so all of our open-ended evergreen investment funds that investors like yourselves can invest into in order to drive consistent, steady returns and grow over time, essentially without the volatility that could come with other investments such as, the public markets and publicly traded companies. These are the funds and the other kinds of things that we're doing in terms of our real estate acquisitions and dispositions, lending, capital markets. We have a fully integrated development and construction group, portfolio and asset management, and property management and resident enrichment. And that's where we really get into the magic of how we deliver building thriving communities to our almost 100,000 residents that live in our communities. So that was a lot. What do we do in one sentence? We finance the building of thriving communities. So before I get into exactly how we do that, I wanted to talk a little bit about the issues that we're seeing and that we've seen for many years now. And what is impact investing to us? You see that term thrown around a lot. You see ESG thrown around a lot, but what exactly is it and what is it to us? So for us, this is investments that are made in order to make a positive impact and a measurable one. Environmental, of course, social, and governmental. So based on the way that we operate, we believe in what we call non-concessionary returns and impact. That means that you can make a positive impact and generate great returns. It doesn't have to be either or. So the power of and is that you can make good returns for yourself, for your family, to continue to grow your legacy, and at the same time make a measurable impact in the world. So that's exactly what we're looking to do. There are all sorts of groups, and Nate mentioned just a few before, that are looking to make an impact in their lane. We happen to be a real estate fund manager and lender, but you can see this all over the place in terms of who are impact investors. What are the elements of impact investing? Obviously, you have to be intentional. You have to understand why you're trying to make the impact. When it comes down to looking at these return expectations, obviously, we're not a not-for-profit company. You're not a not-for-profit. You want to generate returns for you and your family. So there has to be some form of return expectation. There are ranges of return expectations. And again, being able to self-direct either retirement accounts, HSAs, et cetera, you have any numbers of things available to you that you can actually invest in that drive different kinds of returns based off of different risk profiles. But at the same time, you can still be making an impact across the board. And then obviously measurement. I think that's where a lot of groups tend to struggle, is how do we measure on top of, the environmental, and that's kind of table stakes for us right now in the real estate side. Almost everything we're building and renovating has energy efficiency and those sorts of things. So how do we make a bigger impact, right? So this is why we focus on making an impact in what we call attainable housing. That's different from affordable housing, or call it government subsidized funding. This is workforce housing. This is where folks are working 1, 2, sometimes jobs, have families that are trying to just continue to make ends meet, but want a safe place to live where they can develop community with each other. The reason why this is so important is because the American dream of homeownership is becoming even more difficult and out of reach. There are some stats here. I'm not going to bore you with them, but you all can tell in your own local markets, and maybe even you all at some point, or your families, have run into this, where it's actually more economically feasible and actually easier in many cases to rent than it is to buy. I'm not an economist or a stats guy, but as you continue to grow, right, and as we continue to move further into the 21st century, there's a continual gap between affording to own and affording to rent. So what we're seeing is that people are renting later, either by choice or because they have to. They're buying later, and in many cases, if they're wanting to live, say for instance, in a single family home, they're deciding to rent it rather than buy it. And they're using that extra capital that they may have put, say, towards a down payment into something like an investment property or into other passive investments. So owning a home as a single family primary residence is getting harder, and less folks are actually doing it.
Mm-hmm.
So this is what we're trying to do, is find this attainable rental housing and opportunities for investors as well as for our residents. You can actually see, again, just anything you can think of as far as any of the stats across the board when it comes to mainly multifamily rental investment, which is mainly what we do. Construction activity has fallen by almost half. It is delivering fewer and fewer units. And last year, for instance, there was higher absorption, meaning more of those coming into the marketplace. But the fact that there are fewer and fewer being started year over year, that means that we're not making a decent, taking a decent chunk out of the 3 million plus gap in rental housing units that we need in this country.
Let me just hold you right there for a minute, Larry. So for those of you that are attending live, if you have any questions, just go ahead and throw those into the Q&A section. Don't do it in the chat there, but throw it over in the Q&A so we can save that for later. And if you have some good ones that are on topic, I'll interject and throw those in there. Otherwise, we'll queue some up and do a rapid fire Q&A towards the end. So just put them over there in the Q&A. We will get the recording of this out later along with the slides. So
yeah, and I just want to add something, because something that's always dawned on me, Larry, and I've been saying this at I don't know, countless events, is that the way that our parents or maybe our grandparents save for retirement is a lot different than how we save for retirement today. The cost of living has gone through the roof. And most people that I talk to at events, they're not in a position nowadays to save their way to retirement. They don't have a lot of extra earnings to make large contributions to their retirement plan. So I think now, and the reason I say that is now more than ever, if you've got existing retirement funds, it's important to find a way to get those invested in whatever the investment is, but that offers maybe multiple streams of income or something that gives you better returns, because you still got to get to retirement. And it's more important to invest your way to retirement than save your way to retirement today.
I'll make this comment too. So my oldest daughter, she'll be 25 this year. Her and her fiance bought a 30-foot RV. They want flexibility and options. Like they don't look, at the American dream as like of home ownership. But what they are interested in is like chasing yield, getting a good return on their investment. What kind of cash flow can they get that gives them the mobility options to create the lifestyle that they want. Doesn't mean they don't want to have physical assets or do real estate. You know, they actively do things in the real estate space, but I think like we're seeing more and more of that. And that's why there's such a great need for this affordable housing and what you're doing as a company on this impact and investing strategy that you're outlining today. So I think it's very interesting, very timely for what we're seeing in the marketplace and kind of where things are, the trends and where we're shifting as a, you know, a society, and, you know, what kind of assets we want to hold versus invest in, versus just living in. And this is what I'm, you know, investing in and want for cash flow and yield. So, and I'll be curious, like we're going to cover that, right? What kind of returns on average you're seeing, and, you know, what that kind of looks like as a waterfall.
Certainly,
Awesome.
absolutely.
Okay.
Yeah, and look, you know, when we look at, you know, where we are today versus 10 years ago, it is obviously a very different world, and it's going to be much different 10 years from now. So for us, and the reason why we have private evergreen funds, the reason why we're vertically integrated, the reason why we're a privately held company and not publicly traded, is because the more risk you can mitigate, the more variables that you could eliminate in your investments, the better off you're going to be. So the consistency I'll take, and, you know, I'll tell you about our returns, of course, and they're all strong, you know, double-digit returns, right? But our number one rule is never lose money. And we go into every decision that we make. And, you know, we're very happy to say that as of today, in the, you know, 20 years we've been operating almost, we've never lost a penny of investor principal. And that is important because, to your point, what Nate was saying earlier too, and Aaron, if you go and you save your way through to retirement and you get into that point where you need to start taking the income at a certain point, but then, oh, sorry guys, by the way, you know, 40% of your value is gone. You're going to have to go back to work. What kind of lifestyle is that? And then how do you possibly make an impact on others in terms of generosity or philanthropic efforts, or creating and building and protecting that legacy? That's exactly what we're talking about here. So I appreciate you mentioning that. And
Well,
yes, we'll talk a little bit more.
and it's important. Not losing your principal is a huge thing. Like, yes, we want to have returns, but, you know, if you lose 50% of your principal, you got to make 100% return to get it back. So,
Exactly.
you know, and especially if you're in that stage in retirement, the last thing you want to do is lose principal, but you do want to have some earnings so that you're just not spending your retirement down until it's gone.
I have a good question. I
Absolutely.
think this is probably a good question for where we're at in the presentation too.
Sure.
This comes from anonymous attendee. I wish we had a name.
Yeah.
We would recognize you. But there's been discussion in the industry that commercial property, specifically office space, will begin converting to residential. Is DLP involved in that conversion or have a plan for that in your portfolio?
Yeah, it's a great question. Right now, we are developing or have some form of development or construction on about 10,000 units of mainly multifamily and single family build to rent product. But with that said, where we started in Bethlehem and Allentown, Pennsylvania, the Lehigh Valley outside of Philadelphia, for instance, we own a building called Grand Plaza. It's right in the center of town, and it's having a resurgence. But at the same time, there's a problem where the folks who are working in the city have to obviously commute in. It's almost like a reverse sprawl, like we saw years ago.
Mhm.
People are wanting to come back into these towns so they could be closer to amenities, closer to where they're working. But it's hard to find affordable housing in the middle of a city, even somewhere like Allentown, Pennsylvania, or anywhere, right? So in Grand Plaza, it's an 8-story building. We actually occupy and own the whole building, but we occupy the 8th floor. And we've recently redeveloped floors 2 through 7 to be residential housing. And some of that is condo for sale, some of that is for rent. But you're absolutely right. We're seeing fewer and fewer folks, especially as the work from home boom continues, more flexible work. Employers are seeing that it's not as feasible, and there's all of this overhead with a massive building when you could telework or find shared space somewhere for your meetings, especially if you're a small business. So yes,
Amazing.
it's certainly not a core part of our strategy. I mean, we're acquiring multifamily communities that need value add, that have been in distress, that need renovation, as well as building from the ground up. But there is absolutely a place for conversions of formerly what you would consider true commercial or office space into residential. Absolutely.
Great. Thanks, Larry.
Absolutely. Yeah, and that's, for us, I mean, the asset classes we can talk a little bit more about, but number one, affordability is huge. So from our perspective, none of our rents, for instance, in our portfolio or any of our communities are any more than 30% of an area's median income. Now more than half of Americans are renting and they're paying more than 35% of their income, some upwards of 50% of their monthly income. So again, if you think about and what we call living fully, all the aspects of your life and fulfillment and fun and finance and freedom and friends and faith, how do you possibly live fully if you're just struggling to pay the rent and you have nothing left over to do anything else with? Never mind build a family or get a leg up. So what we look about living fully is to achieve success with significance. And what I mean by that is we achieve our own goals as a company, as a family, as individuals, at the same time as making impacts on the lives of others. So this is what we're talking about. I mentioned here with attainable housing, rents below 30% of an area's median income. Also, a thriving community needs to have, folks in those communities need to have access to banking, lending, investments, financial literacy, how to even just balance a book, right? Those are things that when you're in survival mode, you're not even thinking about planning in many cases. Companies that create jobs available in the local area where these folks are living so they don't have to travel an inordinate amount of time to get to. The other thing that we talk about is the loneliness crisis. I think there's some studies out there that talk about how America is becoming one of the loneliest countries in the world, and through deep connection, families. When's the last time? I mean, many of us live in homes and we know our neighbors, we know their kids, they play with each other. But I would have to imagine, and you say that many folks, especially folks who are renting and move on average once every 18 months, are not developing deep relationships with the people that they live even next door to. So residents who are happy, fulfilled, thanks to deep connections with the people. How many people do you know that if you had an emergency and you had to go, that you would leave your kids with, right? There's one or two people out of anyone that you know that likely is like that. And if it's more than that, you're lucky. These folks don't have that connection at large. Access to education, obviously. Strong family values, being able to continue to grow and understand what mission is for them and what the impact is that they want to make on the world. Getting support from the government. Obviously, we're not government subsidized in our investments, but utilizing programs that can help give folks a hand up rather than a hand out, helping make folks aware of that in order to be able to continue to grow. Obviously, healthcare, nutrition, impact, and then faith. Regardless of someone's faith background or journey, we believe we all need grace and love as a core of what we're doing. So how can investors be part of the solution? We've launched 13 funds in our history over the history of our company. At the beginning, they were more closed-ended kinds of funds. You invest a certain amount, it goes into this deal or a couple of deals, very much kind of similar to the syndication models where you're investing in one or two or three properties or this loan or that, that asset. Over time, we found a few things. We found that number one, we hadn't in the past been terribly creative with our naming, so bear with me. We had Equity Fund 1, where we invested in our mainly multifamily communities and some single family. And it was a closed-ended fund. We paid a great, average annual return to those folks, and we paid them back because we sold the properties. 100% of those folks came back to us and said, well, what are you guys doing next? They wanted to continue to invest. They didn't want to have to keep doing this back and forth of getting paid back and then redeploying, because then your money's not working for you. So then we opened Equity Fund 2. And then obviously time went by, and we've launched a few others since then. But what we found is an evergreen or open-ended structure is a way for us to be able to say, you can invest, and once you invest with DLP and you're, say, deploy, you start earning on your investment, you're always deployed. So as loans pay off, say on our lending side, as we sell properties, you get the benefits from that, but you don't have to keep doing the back and forth of not earning and being deployed again. And on top of it, the other benefit of and again, we're huge fans of open-ended evergreen funds, even if they're not just ours, is the diversification that you're able to get through funds like this. Our DLP Lending Fund, for instance, it's been open for just over 10 years. It opened in October of 2014. Right now, it has a portfolio of about $1.2 billion of loans across 300 individual loans. Now, when you're looking at it that way, you're saying, okay, well, if one loan or something is going to go into some form of, call it maturity delinquency, their refinance on agency debt or a long-term debt is taking longer than expected, which we have seen over time. They're still paying their, their required monthly payment. We're actually still able to provide a return to investors while they work on that particular deal. And because it's not only invested, your capital is not only invested in that one loan, you don't have to worry about stopping distributions. You don't have to worry about, okay, well, I don't have anything else to rely on. So you have all of these other loans. And likewise, in, say, for instance, our DLP housing fund, 8,000 plus units in that fund alone, across 14 states. If one community that we buy and we're adding value to is not moving to stabilization, say, as quickly as we'd like, we're going to, first of all, report it to you. We're extremely transparent, and we'll talk a little bit about that. But we also have all of the other communities that are overperforming or performing to help bolster that. So from our perspective, you're bringing down risk through the economies of scale of an evergreen open-ended fund. So these are the 4 funds that we offer today, and I won't go into too much detail because I don't want to make it seem like I'm selling them, but all of our funds are open-ended. All of them pay what's considered a preferred return, meaning you're paid first before DLP gets anything. And all of our returns are net of any fees or anything like that. So what we have is our preferred return, and then a management fee, and then we split 80% of the profits to you, the investor, and then 20% to DLP based off of performance. So since inception, our DLP lending fund has been just over 13% net returns to investors. DLP Preferred Credit Fund, which is contrast to our lending fund, is our first lien only. These are all short-term bridge loans to experienced operators that do very similar things to us, very similar asset types. We only lend on properties that we would be very proud and happy and have the expertise to own and manage. So the lending fund has paid a little over 13% since inception. Preferred credit fund, we're doing a little bit more of that mezzanine debt, so it's closer to 11%. Our DLP housing fund since inception has been just under 19.5% net returns to investors. And then our building communities fund, which is where we're quite literally building ground up construction. That's where I mentioned we have upwards of almost 10,000 units under some form of development or construction. Has been about 12.3% net returns to investors since inception. So when you look at our target returns, they're anywhere from a target of 9 to 13%.
Okay.
None of our funds have ever been under 10% net returns to investors. But for us, and I'm an investor in all of the funds alongside all of our 34 plus 100 investors. And for me, again, kind of coming from where I come from and seeing what I've seen over the years, being able to say, look, I can definitely invest somewhere where I can potentially get 30, 40, 50, 60%, a 5x multiple in X amount of time, right? With DLP, you can invest for the long term and take advantage of long-term growth as well as cash flow if that's what you need. But certainly when you're investing in, self-directed IRAs, for instance, that longer term growth you could still accomplish. But at the same time, you're not looking at it every day to say, okay, well, it's down 8% today, it's up 14% tomorrow. It's all about that consistency. So we would much rather say, look, we're going to make a tremendous impact on the lives of so many hundreds of thousands and ultimately millions. And we're going to serve our investor families through being good stewards of their almost now $2 billion of capital that they entrust with us. But at the same time, we can make a positive impact. We can solve for these crises that we're trying to solve for, namely the affordable housing crisis, and then provide a way for you as an investor to not only have a basis from which to work, but then think about the bigger picture. The funds that we have are a conduit to the bigger picture of enabling generosity. What are the causes you feel strongly about? What does legacy mean to you? And how do you define that? And how do you enact it? And then again, most importantly, how do you protect that and then transfer it to future generations? So that's really what we're all about. I mean, super high level overview as far as who we are, what we do. We are extremely communicative. So obviously, I'll make sure that we have our contact information and everything for you all, where we have our DLP investor portal. All of our funds are audited by a firm called Cohen Resnick, one of the top 10 CPA firms in the country. You have all sorts of reporting. Every month we provide our fund reporting, financials, and for instance, even on the lending fund, the loan tape. So all of the loans, all of the terms, and then all of the properties that we own and where they're performing. So
Great
we would love
stuff,
to have a
Larry.
conversation with you.
Let me ask you this. Are these
Absolutely.
all, what kind of funds are these? Are these Reg D offerings? Are they all registered with the SEC? Do you have to be an accredited investor? Like what are
Sure.
we working with?
Absolutely. So all of our funds are set up for in the 506D. So you have to be an accredited investor, Reg D, but we can definitely talk and help through that. You can either get a third-party letter from your CPA, or we work with a couple of groups that you could submit your information on your own in order to get that accreditation. And I would say that if someone doesn't know whether or not they're accredited, in many cases we've walked folks through that and we found that they are. So
Okay.
we love walking through that process. And yes, we are looking for accredited investors, but certainly would love to have a conversation with anybody that's interested.
Yeah, just at a high level, for those of you tuning in live, will be watching this recording later. There's lots of good information out there on the accredited investor status. Typically, the financial criteria as an individual, it's income of the last 2 years and a future year of 200 of income over 200,000. You and a spouse, income over 300,000. And there's also some professional criteria that can qualify you as well if you have certain FINRA licenses, and there's also entity way of doing it via an entity as well. So there's a few different ways that you can qualify with that. So Sue asked a great question on the exit strategy of your funds. What is the typical exit strategy look like, and the term limits, especially when investing with an SDIRA?
Great question, Sue. Yeah, and in terms of another benefit of being evergreen and open-ended funds, we're able to offer a level of liquidity that, say, investing directly, certainly into a real estate asset or into a syndication does not allow. So on the lending fund and our DLP preferred credit fund, we have 90-day redemption, where you could request redemption from the fund at any time with 90 days notice. Now, I'll tell you a not so well-kept secret, but it's actually never taken us any longer than 60 days to ever redeem any one investor out. So as we have, say in the lending fund, we have $30 to $40 million of loans paying off every single month. So we have quite a bit of natural liquidity occurring within each fund, no matter what. So you have 90-day redemption on the lending fund and the preferred credit fund. And on the housing fund and building communities fund, even though they are equity funds, they are slightly less liquid, but we have annual redemption. So what we do is, and we're actually in that time frame coming up now, where we're about to announce our 2024 returns, pay the profit
Yes.
split for those funds, and then have a net asset value adjustment. So after that occurs between March and April each year, you could request a partial or full redemption. It's a part of our docs, and you have every right to do so. And then you are able to redeem out during that time frame once per year. And there are blocks, so people will then ask about call it gating or whatnot, right? So in the lending fund, for instance, and the preferred credit fund, if for some reason we were ever unable to redeem any one investor out, which is obviously highly unlikely, we could talk more about the liquidity we have and the backups that we have. If we were unable to redeem any one investor out at any given time, we can't make any new loans until we've paid everyone off. So from a perspective of liquidity, and as I mentioned, loans are paying off all the time. It would just be a matter of time in that case. And likewise on the housing side, if for some reason we were unable to pay any one investor at any given time through that process, we would be precluded from making any new investments until everyone's paid off. So you as the investor have a level of liquidity, even though your intention may be to stay in the funds for 7, 10, 20 years. That's our intent, is to keep them open in perpetuity and grow alongside you and your journey.
Great. And is this how are people, you have an email you're providing, Larry, or they just need to scan the QR code if they're interested in learning more?
Yeah, so you can scan the QR code, and my email is really easy. It's larry@dlpcapital.com. And so I can get you hooked up with more of our information, and we have a phenomenal team behind us. So if you do reach out through the QR code here, we'll be making sure to get somebody in touch with you right away. And my number directly here to my office is 904-289-3765. So Larry@dlpcapital.com, 904-289-3765.
I might just drop that in the chat for everyone. So you got Larry's email and phone number.
Thanks,
I wanted to circle back on something Larry said a few slides ago, because I think it's important to mention when you were showing the returns of the funds, and you kind of mentioned a lot of people, it's not a 5x, it's not a 10x, it's here's a word of advice for everybody out there that are looking for home runs, and I say this because you guys know me, I'm a long-term baseball player, played D1 baseball. I relate it to baseball.
Yeah.
Base hits, doubles, even walks, they score runs too. So when you're picking your investments, don't sit on the sidelines and wait for home runs, because that home run may never come. But sometimes it's just about getting on base. And I think even Matt says that, a 10%, a 12% return is better than zero sitting on the sidelines. And I'm not saying that to get you rushed into an investment, but I often hear that with self-direction. It's, they feel like they have to find the best investment on the planet when they're picking it, and you don't. You just have to find something you're comfortable with. Like Larry said, find something that you're not going to lose money on, or something that just gives you an above average return, and try to compound it, or do something to that effect. But you don't need to hit home runs. You don't need these 5x multipliers. I think people are getting spoiled with Bitcoin runs and things like that. Guys, it's that
1,000% returns.
Exactly. Just get on base, score runs, however you can. So I just wanted to circle back on that.
Awesome.
Sure.
What other words of wisdom do you have for everyone, Larry?
Yeah, and so certainly I agree with you, Nate. I mean, one of our core values is the 20-mile march, and that's a story about two groups that went to the South Pole. You could read up on it, but one group, they went 20 miles every single day, regardless of conditions. The other group stayed in their tent when the weather was bad. And not only did the group that went 20 miles get there first, they had zero casualties, and they were able to do everything that they set out to do. So for us, that's a lesson that it's not slow and steady wins the race necessarily. You have to work hard, and you have to continue to press. But there's always going to be a reason to not do something. There's always going to be an excuse to sit on the sidelines. Do the due diligence that you can do. Make sure you have all the information you need to make an informed decision, and then make the decision. And then the other thing I would just say is that we at DLP, again, we're focused on that bigger picture. So we hold events throughout the course of the year, very similar to what you guys do in terms of bringing in phenomenal speakers. We do workshopping with our families. We bring our operators and our investor families and our teams together so you can meet the people that we're quite literally investing in. So we have some of those throughout the course of the year too. If that interests you, we'd love to have you join us at those as well, where we do the bigger work of defining what legacy means to you.
And we have another question, Larry. Want to see your answer on this, and then I can take it a little bit further. But as far as
Sure.
investors go, are they issued a 1099, or I'm assuming they're issued a K1 at the end of the year?
Sure. Yeah. So our DLP lending fund and preferred credit fund are 1099.
Okay.
The building communities fund and the housing fund are K1 investments, but
Okay.
they are all private REIT elections from a tax perspective. So even if you're investing, after tax money, but certainly, you're protected with the REIT election from any sort of call it phase outs on the qualified business income deduction or whatnot. So. And we have a phenomenal team, operations and experience team, that work directly with you all at Directed IRA we've actually managed overall about 1,300 some kind of qualified accounts. So we have a phenomenal team behind us that can help make sure that that's all taken care of with you, and keep the tax side up and running.
Awesome. Any other questions?
I think if not, we'll end a few minutes early.
Okay.
If you have any burning questions, throw them up there now.
Yeah.
Otherwise, you can feel free to connect with one of our self-directed IRA and solo 401k specialists. You can just go to our website at directedira.com.
And Angel, if you could pull up a slide.
And you can hit the book a call button there in the navigation, or you can scan this QR code and you can have a call with Nate the Great.
Or anybody on our team. So that if you scan that QR code, that'll go to our book a call page. We've got, maybe a dozen or so IRA executives, account executives. They're all well trained. That's usually the first place we want people to start, is book a call with them. You can ask all your questions. They'll walk you through the application process, make sure you've got the right account established, ask you some questions about other accounts, and then facilitate the next step, which is transferring some money in, whether you're moving money from an old, IRA, rollover IRA from Fidelity or Charles Schwab, or maybe you've just left your corporate job and you've got that 401k and it's finally time to take action and take control of that 401k or 403b, TRS plan, TSP. Those can be rolled into self-directed IRAs. Or again, we're in that time of year, if you're looking to put more capital in an IRA, between now and April 15th or so, tax filing deadline, you can make contributions for 2024 and 2025 to most every plan. So we can help.
Including your HSA?
Including your HSA. So we can facilitate that as well. And here's another thing that we offer that most companies don't offer is when you look at all those plans that we kind of mentioned before, you've got the traditional, you've got the Roth, you've got the SEP, you got the 401k, you've got the HSAs and the ESAs. One of the solutions that we provide investors who want to get all of those plans together, and maybe they need those plans together because they might have to hit an investment minimum of $50,000 or $100,000. We've got our sister company, KKOS Lawyers, that sets up checkbook IRA LLCs that allow you to take all of your plans and put them in one central location, an LLC bank account that you have direct ties to. You can deploy funds, but it gets all of your plans together. Even if the individual plan doesn't meet the investment minimum, all of the plans together within an LLC might meet that minimum. So that's a solution that we specifically offer here at Directed IRA.
Now you'll still have all separate plans. So the traditional will be one member, the Roth will be one member, maybe an entity you have will be a member, and maybe you personally or a spouse personally. These are all separate members of the LLC, but you're combining all the money, as Nate was just outlining. So that's a strategy you can do. That's called a multi-member IRA LLC. You can go look at the checkbook IRA LLC section on our website. We got a ton of great podcasts, articles, webinars on that strategy. You can go check that out. And a lot of people need that, especially man, real estate's pricey. So if you want to go buy a piece of property, especially in Phoenix, you're spending $400,000 or $500,000 on a 3-bed, 2-bath. You might need to, do that strategy if that's one of your plans to have a rental, or certain fund minimums, $50K, $100K. You might need to combine a little bit of that to meet the thresholds as well. So,
and
we're here to help.
You know where else we talk about this in depth?
Where?
The Self-Directed IRA Summit right there. So that leads us right into it, guys. Don't forget, get your tickets now. Let me just tell you guys, we do not try to put on events with 1,000 people, right? We don't give away free tickets. That's not one of these types of events.
There's no upsell. There's no coach. No. We don't do any of that. We're a self-directed IRA company.
No, we want people that are really serious about this. I think the room holds how much? 250 maybe?
Well, I think we'll go upwards of 300.
300. Yeah. Okay. So 300, it's the first 300 people that buy tickets, guys. And there's going to be, with everything going on right now, and the Texas RIA is helping us promote it, tickets are going to go fast. So make sure you get your tickets. Early bird pricing right now. We've got virtual tickets, obviously, if you want to just jump on those. We've got the general admission tickets. We've got the VIP tickets, which will give you some extra bells and whistles. Whatever the case may be, guys, try to get there. Try to get there live if you can. You'll meet a lot of investors. You'll meet us, the Directed IRA team, and we'll talk specifically about all the different plans you can self-direct, talk about how multi-member IRA LLCs help, the control factor, and all the rules and regulations that you want to know. But it's just a great way to get out there and start, taking action and take control of your retirement plans.
Awesome. Well, thanks for tuning in live, everyone. Thanks so much, Larry, for taking time out of your day. Thanks for everybody taking time out of your day to tune in with us. We'll be sure and get this recording up with the slides and all the great information. And When's our next one, Nate? We have another one coming up.
We'll start having 2 in February,
There
and
you go.
those dates will be released shortly.
Awesome. Okay. Well, tune in more. Go ahead and go to our homepage at directedira.com. We always have updates there. Subscribe to Matt Sorensen's YouTube channel. If you need to learn more about self-directing, go to directedira.com again, and we'll be sure and help you out. I guess have a great Wednesday.
Thanks, guys. Stay warm out there.
Roth and roll.